My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make some money. My job is not just to entertain, but to educate, teach you, put it in context. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. No other stock in this market has more pin action than Apple, except for maybe JP Morgan or American Express or Honeywell or Union Pacific. That's right. We're in a moment where there are more pluses than minuses, and it's all because the stocks generating positive pin action in this earnings season are a lot more powerful than the stocks generating negative pin action. No wonder the averages rallied today. Dow advancing 57 points, S&P gaining 0.69%. NASDAQ jumping incredibly impressive 0.91%. Sure, there are still plenty of downbeat stories out there. The economy, slowing Chinese, whatever, averages, call them whatever you want. The farce hit is Brexit, the tragic 737 MAX plane crashes, where we are now learning Boeing may have known about the plane's flaws ahead of time, the litigation that's pummeling the pharmaceutical industry, and the overhang from this year's flood of new IPOs, many of which turned out to be gigantic losers. I'm going to flesh out those woes later. But what matters most right now is the action in individual stocks. See, individual stocks, they have no ideology. They won't mislead you. They're not bent, as the cops would say in Line of Duty. Fabulous British detective show. Why don't we start with Apple? I mean, you know how much I like to start with Apple. Apple's a stock that's breaking out to new all-time highs. And it's thanks to the incredible popularity of the iPhone 11, which is selling much better than Wall Street expected because it turned out to have this tremendous longer battery and the amazing camera, perfect for Instagram. At the same time, CEO Tim Cook has been able to navigate his way through the trade war much better than almost anybody else I know. He's spending time with the leadership of both countries, with Trump, with Xi. Get this. I think this is perfect about who he really is. He gave the commencement address at Tulane, where my daughter went, and at Stanford this year. But he also just got joined last week the board of the prestigious Tsinghua University of Economics and Management in Beijing. Last week, Cook spoke to China's State Administration for Market Regulation. According to Reuters, he talked about expanding investment in the People's Republic, consumer rights protection, and corporate responsibility. In other words, Cook's not waiting for the trade talks to be resolved. He's not on the sidelines. He's on the front lines. The front lines of the trade war, trying to calm things down. So far, it's working, at least for Apple and its shareholders, who were rewarded with a 1.73% increase, $4.10 gain. Guys, this is $1 trillion company. It's not supposed to be able to go up $4.10, for heaven's sakes. Now, when Apple's on fire, it has a lot of semiconductor pin action. Let's see, Cirrus Logic, Texas Instruments. How about Broadcom? Skyworks Solutions, Micron. A rally in these stocks can trigger a dramatic move in the whole NASDAQ. It's a mammoth breakout that silences the macro junkies who blather on endlessly about the Fed, the fading inverted yield curve, or a big economic slowdown. It's pretty hard to find if you're examining most domestically oriented companies. Hey, speaking of domestic operators, how about that amazing run in the stock of JP Morgan? It's up another $3 today. It is hard to believe that such a high-quality stock still sells for less than 12 times earnings with a yield of nearly 3%. But it's true. See, that's what happens when you report spectacular earnings. The stock of JP Morgan, it's ridiculously cheap. You can't have a real bank rally without this one. It's the best of the best. That's why the stock's fabulous move today was a locomotive that pulled Citigroup, it pulled Bank of America, and it pulled Morgan Stanley along with it.
All aboard! All aboard!
Once again, if you were taking the professional pessimist seriously, you never would have been able to capture this move. No way, no how. We've seen so many big-time money managers, hedge funds, they come on our air, and they say it is the end of the world. There's just forget about it. Hey, by the way, they're really rich. And maybe you're not. They've made the money. They don't want you to have it. Or at least that's what it seems like to me. You know, they think that the financials are the epicenter of the soon-to-self-destruct market, at least until they started reporting last week. Now, it didn't matter that they have consistent mid-single-digit growth. You know, they call this MSD on Wall Street. It's really bugging the heck. Can't they just say the words? Is it harder to say mid-single-digit than it is to say MSD? No. Anyway, it didn't matter that they all have bountiful buybacks and dividends. And it didn't matter that the consumer's in amazing shape. The macro guys don't care about this stuff. They only care about the yield curve. And that's why they got it all wrong. Not that they'll ever tell you that. It's why they've missed out on this terrific bank rally. Oh, memo to these masters of the universe, or at least the macro universe. I feel like a linebacker here. Unless you do some homework, stay the heck out of my zone. Same goes for the strength in the stock of American Express. A lot of times I like to read a company's conference call without knowing where its stock might be trading. It's a great discipline because it prevents you from following the herd. When American Express reported, I thought the conference call was solid. It was a good growth, a tremendous millennial pickup. It was one of those quarters that told me American Express, under the leadership of new CEO Stephen Squeri, has become a must-own financial tech. You either own it or you own Visa or you own MasterCard. By the way, Visa and MasterCard both report next week. Sure enough, after an initial dip, American Express is now roaring, closing at $2.29 or $1.96%. Again, a big company, just 2%, just like that. Then there's Honeywell, HON. If you told me there's a company that's levered to aerospace, climate controls, automation, chemicals, I'd say those are exactly the businesses you don't want exposure to, particularly at this point in the cycle. Yet Honeywell's in fantastic shape. Last week, CEO Darius Adamczyk, now he's Dave Cody's successor, he put on a clinic when he explained how his business is strong worldwide, including China. While the growth in aerospace was downright phenomenal, Honeywell's firing on all cylinders here. Oddly, the only weak business was in warehouse automation. The market accepted it because that division was up against some really tough comparisons. Honeywell's stock on fire. Jumped $3.37 or 2%. Talk about pin action. All throughout the complex. Finally, there's Union Pacific. Everyone thought Union Pacific was this. Wrong, it was this. All aboard. I know some people viewed this quarter as a disappointment, as they had so much weakness across so many different cargoes, and I'll give them that. But look, I think exactly the opposite. Exactly. Despite the revenue shortfall, Union Pacific generated some fantastic earnings. If they can make this kind of profit when business is this bad, can you imagine how much money they'll make when it's good? What happens if we get a trade deal with China or Congress signs up on NAFTA update, whatever they're calling it now? What if the Fed keeps cutting rates? That would produce some extraordinary returns here. No wonder Union Pacific's been leading the transports. Since it rallied last week, it's picked up just another 5 points, 3.45% just today. Listen, this afternoon, I had the privilege of being on Scott Wapner's fabulous halftime show. Wow. Can you get it? I mean, you should watch it. It's really thoughtful. We had a spirited discussion led by my good friend Josh Brown. He pointed out the stocks have been able to rally despite all sorts of obstacles, yet the pessimism is still, it's unrelenting. I suggested that perhaps the macro people had too much sway, as they seem oblivious to actual investing. They're indifferent to what's happening in individual companies. I think some of it is sheer intellectual laziness. They don't want to do the homework. Hey, listen, maybe they're jammed. Maybe they're watching a lot of Netflix. I don't know. It's easy just to spout off about the big picture stuff like the yield curve, because it doesn't change that much. You can pretty much say the same thing every day unless there's like some, couple of points. Some of it's because the concept of trying to make money in stocks seems to elude them. And some of it is motivated reasoning. They hate Donald Trump so much that they can't bring themselves to believe this has been a pretty terrific period for the stock market and the economy. But at the end of the day, you can't afford to take your cue from people who don't want to do their homework. The bottom line, we're getting some tremendous positive pin action here with some very important companies putting up excellent results, and it's reverberating. Yes, their stocks were higher and drag whole groups with them, as we've seen, even though I've never bowled higher than a 143. I got to tell you, it's pretty encouraging. Now, let's see if the parade starts tomorrow, marches to the same positive music. Why don't we go to Rich in Pennsylvania? Rich!
Mr. Cramer, how are you, sir?
I'm doing well. How about you?
Good. I am a young investor, and my question is about Spirit Airlines. They're not involved with the MAX, and the airline seems like they reported good earnings. I wanted to get your take for my portfolio.
Right. Well, I mean, look, we have UAL reporting really unbelievable numbers with Oscar Munoz. He just reported a terrific quarter. Gary Kelly, by the way, a lot of people are saying don't buy Southwest here. They're going to report later today, maybe after they report, but both of those are better than Spirit. How about Catherine in Connecticut? Catherine.
Yes.
Catherine, you're up. It's Cramer.
Hi, Cramer.
How you
Since
doing?
January, how are you?
I'm good. How are you?
Good, thank you. Since January, I both bought and sold Cronus between 9 and 22, overall earning about 3%.
Good.
After a lot of work. I'm not holding any now. And after hours last Wednesday, when I watched the price paid surge up by as much as 40% into the 12s from the 8s, I wanted to eat my hat as I had just unloaded the last I had at 9.3. Given the quick turnaround plunge back down, I was happy that I followed my instincts and didn't jump back in. I almost did. But so now my question is the newly crowned so-called King of the North a buy in the 8s, or should I hold out for it to dip back into the 7s, or what?
Catherine, I don't know. I mean, look, you've done the right. You made some money here. I mean, congratulations. Most people have lost. The problem with Kronos is the vape thing. Now, I know when we had the CEO, and he told us not to worry, but you know what? It's guilt by association. And there's also the PodX. These are the ETFs that just crush these stocks, including GW Pharma. It would really help more if Canopy picked the guy, a woman, guy or gal. You can't use gal anymore, I think, right? Regina, my executive producer, guy or woman. No, gal's out. Gal is out. Gal is out. But you get a person. There you go. You get a person, how about that, who knows the packaged goods industry. Wow, you could see some perfect pin action there. All right, some stocks are more powerful than others, and boy, oh boy, are they causing positive pin action. I always use the name Beethoven when I bowl. You get to name your name, right? I always like to be somebody else when I bowl. All right, oh man, extraneous, but why not? Oh man, money tonight. With so many unknowns trying to gauge what's next for this market, I'm going off the charts to see what the technicals could be signaling. And by the way, they're not signaling anything positive. Hey, then we've seen some troubling indicators in the manufacturing front recently. I'm highlighting one of the few industrials that seems to be working in this market. Do not miss my take on something blank soul. And last week's biggest IPO didn't take place on its average, and it took place on StockX's website. I'm getting to the bottom of it with the company's CEO, and he may be better than the greatest of all time. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.